markets in a minute. US election is unresolved as we stand here. It's 13:30 GMT here in Europe, and obviously the US session is US cash session is still an hour or so away. So monumental evening. The blue wave, the Democrat blue wave, the big win of the presidency, the Senate and the House of Representatives hasn't happened. President Trump has done much better than expected. Let's see. There we go. Looks like he may, in fact, hang on to the presidency, but all still very much in play. Good afternoon, Mohammed, or good evening, Mohammed, or good morning. I don't know where you are, Mohammed, but hope you're well, my friend. It's a monumental, fundamental event, and it's had a big shake-up in the markets. Obviously, we'll bring up the charts in a wee minute. So where we stand at the moment, Biden sits on 238 electoral college votes. Remember the need to get to the magic 270 to make it into the White House. So 238 is where Biden sits, and President Trump currently sits on 213. With 87 electoral college votes still available. Key states, still 7 key states or parts of states still to report. The key ones are Pennsylvania, Wisconsin, Michigan, North Carolina, Georgia, Alaska. That's definitely going to go Republican. There's only 3 votes there, but the big ones are the Rust Belt states, those ones up in the north. Pennsylvania with 20 votes, Wisconsin with 10, 16 from Michigan and Georgia, North Carolina, and 15 as well. So North Carolina and Georgia looking like the president will hang on to those. And it's really coming probably down to Pennsylvania and Philadelphia, the main city in Pennsylvania. So lots and lots of votes will still be counted there. Already the acrimony has started. The president's talked about moving to the Supreme Court. The Democrats have pushed back on that, understandably. So very much in the play. The Senate, on the other hand, still has still 6. Last time I looked to look, still 6 positions to be resolved. They sit at 47. It looks like the Senate will still remain in control of the Republicans because 2 key seats that were tarnished. The Democrats were trying to swing. They haven't won in South Carolina and Arizona. That hasn't happened. So it looks like the Republicans could hang on to that, and indeed President Trump could hang on to his position as the president, unlike what the polls were saying. So good afternoon, everyone. Bernie, Ebenezer, hello. Anything, guys, you want me to look at? Anything with regard to particular assets? So 490 here is wants me to have a look at a WTI. WTI, the West Texas Intermediate. That's what that stands for, guys. And on our side, we call it US oil. So let's have a look at US oil. Any particular time frame, my friend? Where's my US oil deal? Oh, there it's gone. Let's just get rid of me. We'll swap this around. When do I do this? Let's get rid of this. There we go. Let's bring me up as well. There we go. You can see my ugly mug in the bottom. So I'm down here now. So West Texas Intermediate. We had this massive fall here for the beginning of September. Now we've had a similar fall here towards the end. See how this is sort of married? I wrote timber here on my MT4 platform, but big fall down here at the beginning of September. We had a similar fall earlier, late last week and earlier this week. We've crashed all the way down to this big yellow line here, which is $35 US dollars a barrel. And then since the beginning of November, we recovered very aggressively. If I zoom this in, you can see big 3-day candles here, 3 white soldiers as the candle patterns forming. This is all to do with gossip that OPEC and OPEC Plus will indeed look to cut production. The price has been falling because we've had a lot of build in inventories. Inventories have been much higher than expected. Libya came back onto production as well towards the end of October, and we've had this big fall down, and obviously the worry about COVID and global demand looking very weak. So oil continued to fall into the end of October. We closed down on Friday, and then Monday, Tuesday, Wednesday this week, beginning of November, we recovered quite significantly. So spiking, couldn't close under $35 here on Monday when we were shaking out. We went all the way down to 33 61. So we've recovered. As far as a technical view here, 490. The daily time frame really needs to get above here. It gets above this 20-day moving average, which sits at 39.35. So 39.35 on the daily time frame to move this back into the sort of the positive. You can see here we're at the bottom of the Bollinger Bands. The Bollinger Bands have widened as we've moved down aggressively into the end of October, and these lows here, see how the low is lower than that low, and it's lower than that low as well. So sort of pressure remains to the downside. To the upside, we see this top here around this 61.8 Fibonacci level. I didn't see that in that blue line. That's a 61.8 Fib level. Sits there around $41. So $41 a key resistance to the upside, 490, my friend. But I say in the lower time frame, certainly it's had a very sort of pokey week, very strong week here. So this is the 1 hour chart. The week starting here, this big sell-off on Friday, on Mondays we opened up and we've recovered Monday, Tuesday, Wednesday. We're up and pushing. As far as today is concerned, you can see we've ran to this 38.75 R1 resistance. And these fractal highs here, 1, 2, 3, 4, 5 fractal highs here. So big fat resistance at R1 today. Can't get over 38.75. If we do, we'll break out quite aggressively and then test the next weekly fib there at 38.20 at $39 itself. So build up, holding up to the upside. Remember, it is Wednesday. It's still a normal trading week with regard to economic data. Huge week. Putting aside the fundamentals of the presidential election, we got obviously weekly inventories today as well. We had private inventories yesterday. So oil relatively well bid in this intraday chart, capped at 38.75, awaiting inventories in an hour or so. Flight 490 fight. I hope that answered your question. Albert, good afternoon to you. Alberto, Eduardo, this is awesome. Oh, thank you, my friends. You are awesome. We're all awesome. It's an awesome sort of world we live in. We're going to get over this COVID crisis, guys. We are going to get over this. Don't worry, there is an end in sight. Alberto, hello, sir. Mohammed, euro, dollar. Mohammed, any particular time frame, my friend? Remember, it's all about time frames. But let's have a look at euro, dollar then. So euro, dollar here, obviously very volatile. This is today's session. Very volatile session. We recovered yesterday. Over 117 yesterday. So here we've been under 117 for a while. We broke under it here last week. So here we are. This is yesterday. This is Tuesday, Monday, Friday, Thursday. We'd broken under 117 last Thursday, moved back down, and we traded 3 days under the key 117. We tested on Tuesday as low as 116.18 or 116.820 area. And again, this morning, in the panic of what was going on with the election, euro dollar also traded down but couldn't close on the hourly chart below this 116.20 level. So that's becomes another key intraday support level. The spike in that hour actually took us to test 116.02. So 116, this big fat line here, you can see here, big round number again, was tested, and we've rallied off there quite significantly as the dollar's weakened today on the uncertainty with regard the election outcome. So 116 was tested. We rallied 100 pips. It was a big move intraday for euro dollar through 117. We now rallied to highs again this afternoon from this morning to test the 200-hour. This is the big orange line here is the 200-hour moving average there. So that's our next resistance if we're going to move forward at 117.35. So 117.35 is our resistance today. I'm not sure what that line is there, 117.25, so that's a 117.25 from other previous nights. So today remains long, it's gone long again, very choppy, but gone long. The pivot point today sits at 116.95, so just under 117, so key support area there. Can we hold 117 going forward? If we look at the higher time frame, the 4-hour time frame, again, it's moved down from last week. This was last week. This line here is the 23rd of October. It's the beginning of last week, and we moved down all of last week into the end of the month, and then we recovered at the beginning of October. So our highs here was this 1885 level towards the end of October, and we've moved down from there quite significantly on the 4-hour time frame. 4-hour time. See how volatile we've been with the election day. So again, another key resistance there sits at the 200-hour. Sorry, not 200-hour. The 4-hour 200 period moving average sits there at 1750.45, and then the R1 is 1757. So big, quite a thick resistance level there on the 4-hour. So needs to move up there, and support sits at the S1 daily S1 level there at 1650 for 4-hour traders. Okay, on the higher time frame, the daily time frame, it remains sort of moving down. We had this topping out here for 4 days up here, this 1857 area towards the end of October. I've talked about before these 4 days where we just didn't come higher, and now the end of day traders have been short for most of the end of October certainly into the end of the month. Perhaps squared off here on yesterday, Tuesday, as we moved up, but we're still under the 9-period daily moving average there. So that's still relatively short, and the 20-day moving average to move this back up on the higher time frame, on the daily time frame, euro dollar to go higher, needs to break over 1760 zone. That's the 1760 zone there, the 20-day moving average, and that orange pink line there is the 50-day moving average, which sits at 1775. So still relatively weak on the daily time frame, much more perky on the 1-hour and the 4-hour euro dollar. Mohammed, my friend, hope that's answered your question. Now then, where did I get to? Yarin, good afternoon. Yarin's talking about Aussie, New Zealand. Well, we talked about this yesterday, didn't we, in the live analysis. Big mover, Aussie and the Kiwi, both of them in demand. I don't know, I've got one here on this chart here. Let me just go to a different profile. Let me just bring in the Australian dollar profiles. Yeah, Aussie, New Zealand been in a nice trend, and then we reversed quite aggressively. See this? Let me just go to the daily time. You see, been trending lower basically. We tried to move up here towards the middle of October, and it just ran out and moved back down under the 50-day. So here, this move up looked like it was very positive, didn't play out, would have got stopped out straight away from this move down at the beginning of September. So September from these August highs, September down, October down quite significantly, having a bit of a retrace, and then we've moved down again and tested this floor. So this potentially is now a floor that's putting in. It's not really too early to tell. See, we didn't go as low as we got here all the way back in July at 1.06 we've broken up, so 1.0597. So 1.06 is our support on the daily time frame. Now we've had 1, 2, 3, 4 days up. Big day yesterday, breaking over the 200-day moving average. So strong, big candle, taking out all of this previous action, all these 3 candles here, taking out all this previous down action. So we're continuing to move up. Interestingly, today we continue to move high, which is understandable, and we're now testing back over the 20-day moving average. So this run needs to continue to break and hold over the 20-day moving average. But more importantly, it needs to break here. So for this to really move high, it needs to break 107.50. So 107.50 on the daily time frame, Yarin, to move high, which is today's R2 and the 50-day moving average. Looking quite perky today, but we have had 4 days up, so we may retrace, just like we've done many times, trying to break that 20-day moving average in this bigger, longer, month and a half, 2 months down, 2.5 month down trend for the Aussie and the Aussie against the Kiwi. Remember, earlier in the week we had the Australian RBA cutting rates in line with what the market was expecting. We've got a reinvigorated landslide win for Jacinda Ardern in New Zealand recently. So New Zealand dealt with the pandemic very aggressively, shutting down things very aggressively, very quickly, and they've come out the other side very quickly as well. Australia's just coming out the other side. Remember, Southern Hemisphere, I'm sure you are, I don't know where you are in the world, Yarin, but Southern Hemisphere now entering midsummer. Melbourne in Australia has come out of 112-day, I should say. Very, very strict lockdown, but again, with very few cases, very few deaths in Australia, but it's come out very aggressively. So things are looking up in those two countries, and Kiwi continues the recovery that it's sitting at basically. So there we go. It needs to break. It's broken the 200 period, which is positive. It's broken the 20-day, which is positive, but they're unaligned, the moving averages. So it's still got some key resistance there at 107.63. That's my analysis on the daily time frame for Yarin on the Aussie New Zealand pair. Riman, Mujahideen, direction for gold. Well, gold continues to sort of limp a bit lower. Last week we were talking about 1870. This week we touched 1860. We've rallied obviously quite significantly today because of the uncertainty regarding the election. Basically, the uncertainty the election has generated saw a lot of Sean, I've just seen your comment. Thank you, my friend. A lot of you've put me off my stroke, Sean, my friend. A lot of bid for American assets, basically. So when there's this uncertainty, we got the dollar rallying, we had treasuries rallying, so the yield came down quite significantly, and equity markets rallied as well continually. We shall see where we go from here. But as you can see, this is a daily time frame, Rahman, and you can see we're sort of gradually sort of stepping down. We're broken out of the key 1900, 1920 channel we've been in and broken out of it. Looked like we were moving down here into the end of the month. But again, just like some of the other assets we just looked at, gold continues to recover into the beginning of November. So we're back over 1900 on our close yesterday. We're back over the 20-day moving average, although, the moving averages aren't really helping us at the moment because we're channel bound. We're channel bound. So we're moving around basically in our channel sideways. Oscillators is what you want to be looking at, not moving averages, because we're not, there's no trend going at there. See how the Bollinger Bands are sideways. We're in the upper half, then we're in the under half, we're in the upper half again now. So we're just moving through the 20-day moving average. It's not really helping us. But the key thing is that the lows, keep getting tested and keep getting lower. So we've tested 1870 and then we tested 1860. So see where we go. It looks like it's sticking up at the moment, but again, it needs to break out of 1920 if it's going to move higher. Eugene, it needs to break below this floor here, this previous low back here around this 1870, 1860 level we just talked about. Break under that for it to move lower. At the moment, it's just still really in this sideways action. Sean, thank you for your comments, my friend. I appreciate that. Next one. In fact, have we got any more? We haven't got any more. Sean says, Jane, I should have a filter. So I apologise. It's just the microphone I'm using, Sean, is simply it's just plugged into my. I'm actually speaking to you from a laptop here in my home office. And it's just the microphone off my headset, so it's not the best, but hopefully you can still hear me and it's making sense. So there we go. As far as the data is concerned, we obviously the main data is any election news, and I say there's these 7 key states. 4 or 5 of them are very, very fundamental. Pennsylvania being probably the key one as far as Biden's concerned. 20 electoral college votes there. He needs 32 to get to the magic 270. And the president sitting on currently 213, but appears to be ahead as the votes get counted in many of the other states. So Michigan, North Carolina, Georgia, he seems to be ahead apparently. So the key one for Biden is Pennsylvania. Wisconsin's also sort of edging towards Biden. It looked quite strong in the polls. The pollsters again have been caught short. So lots of outcomes from that as well later on, and ramifications for that as we move forward. But as far as the rest of remember, we've just had ADP number come out. Let me just double check the number. It came in at 365,000 ADP. Perhaps oops, cancel this. All right. Oops, I suddenly went to sleep. So it's come in at 365,000, significantly less than expected. Expectations were for 650,000, and We had 750,000 last month, so it was expected to slip, but it's been a huge slip, big miss, 365,000. So it used to be the way they correlated and counted these numbers, the private payrolls and the official government non-farm payrolls on the Friday used to be very closely correlated. So a big miss for ADP on Wednesday used to mean typically a big miss for NFP on the Friday. That's not always the case. There's no direct, the correlation is really not as strong as it used to be. So NFP is, there's big wide variance for NFP on Friday. Consensus on some sites are looking at 600,000. Other sites, the Reuters poll are looking at about 700,000. The Bloomberg site is about 650,000. So it's quite a wide variance. There's some really high numbers in the million plus and some really low numbers in the, less than 100,000 as well. So big wide variance in all the analysts for NFP on Friday. So again, the key thing for the NFP numbers for me, as I say every month, is really that earnings number and the unemployment number. Unemployment again is expected to come down again on Friday. Remember, we breached the key 8% last month, so that's expected to come down about 7.6% on Friday. So again, watch that. And again, depending who may have achieved the White House by Friday, it'll either be another big press conference on the Rose Garden from President Trump, potentially, if this numbers comes in better than expected, like he's done the last couple of months, or the first big data point for President-elect Joe Biden. So we'll see what that number looks like on Friday. Obviously, before that, we've got tomorrow, we've got the Bank of England expected to add another 100 million to its asset purchase facility. No cut in interest rates. Again, the market is expecting the Bank of England to perhaps follow suit with some of the other key central banks into 2021 and move into negative interest rate territory. They've consistently said it's just part of their toolbox. It's just something they would consider. They have to look at the alternative scenarios. They're not really considering using it, but the words they use and the words they don't use can be quite instrumental in how markets react to these central bank speak that comes out every few weeks. So that's another key event. And then obviously later tomorrow we've got the Fed announcement as well. So it's a huge week. Fed at their usual time of 2100 hours GMT. Obviously get lost in have we or have we not got a president? Has one of these parties get across the line? So it was expected with all this mail-in voting. The American election system is a law unto itself. The states do think, the individual states have their own rules and regulations. There's no national policy. And even counties within states have their own ways of doing it as well sometimes. So looking from the outside in, looks, well, this is it's the most powerful country in the world. Why can't they get all their votes counted on election night like most other countries in the world do? Well, this is the United States of America, and this is just how they do things. So huge millions of mail-in votes taking a bit longer to count, because some states didn't start counting until this morning. Others started counting as the mail-in votes came in. Others started counting as the polls opened. Others didn't start counting until the polls closed. So, that's the beauty of the American system. Each state and each county have their own rules, and everybody agrees with that. And that's how the system works in the United States. So, but it's holding up a decision. It's creating more uncertainty. Uncertainty is not good for trade. It's not good for markets. And obviously, socially, we've got this, obviously the pandemic hanging on people. So it's a very, very significant situation for the good people of the United States of America. Very, very divided, clearly very close, whoever's going to win. So very deeply divided society on this particular election day. So, no more questions coming in here. Now, I don't know whether they've slowed up or they've stalled again. It's what tends to happen sometimes. But There was lots coming in immediately, and I haven't had one for 15 minutes now. So whether I've just bored you all silly or not, which is obviously possible, I don't know. But let me just recap where we are then on election day 2020 or post-election day 2020. Let's just go back to the 1 hour chart. So I haven't seen them all. Let's go through them individually. So Euro initially spiked to 1770. We moved all the way down to 1600, so a huge 170 pip move on election night. We've now recovered most of that, and we're up here at 1725. Our resistance is the 200-hour moving average there at 1735 for any further progress on euro dollar. Dollar yen, on the other hand, yen still in demand. So again, another big volatile day. Yen went as high as 105.35 in the early hours. And we're bound down again to test 104.15, key low from earlier last week, and the big 104 round number just here at the bottom of the chart. So dollar yen progressing or moving again, trending lower as we go into the 40 minutes before the cash open in the United States. Sterling had a really, really volatile week. We're down and then we're back up again, but here intraday again, it's like most of the other dollar crosses up and then back down again, and sterling recovered the key 130 handle. So sterling continues to pivot through the key 130 area, and it's doing so on an intraday basis there. The daily pivot there sits at 129.85. Aussie went to 72 overnight and then went all the way down to 70.70, and we're back over 71.50, another key pivot area. A couple of weeks ago, 71.50. So away we go there. Zubas, good afternoon. How about, I can't read what you're asking about, Zubarai. I can't see that, my friend. How about, it just says E. I don't know. I can't see what else you've typed there, my friend. Do you want to type it in again? And we'll have a look at it. While I'm going through these. Kiwi, 67.35 highs this morning. Down to 66.45, and again back to our pivot point today at 66.85, a previous area of a sort of pivot and resistance, 66.85 for the Kiwi dollar. Dollar CAD, driven by the oil price. So we were down yesterday. We went down to test 131 again. And we've been as high as 134 not that long ago. So we've had some huge movements in dollar CAD as the oil prices varied around very, very significantly. So we're back this morning, recovery from 131 to 133. So a huge 200 pip move for dollar CAD in the last few hours. And then we've retraced most of that back under 132, and we're back to our daily pivot point here at 131.56. On the dollar CAD intraday chart. Right, I've got a new request. Sorry, Zubari, I can't see. You've asked for something. I can't. It just says E, and I don't know which E you mean. Nasdaq from Maloto. Let's have a look at Nasdaq. Again, the Nasdaq fell very aggressively on Friday, as did all the equity markets into month end. There was like 5.5%, 6.5% move in those markets, but since then they've recovered very significantly as well. And the Nasdaq, as it led everything up, led everything down, it's led everything higher this week. So again, you see this big slide down. It's the daily time frame. I assume the super big move up. So the daily time frame on the Nasdaq here. Oops. So we moved down. And yesterday we had a strong day, but a huge day today. I say the big technology companies are still remain bid, and we moved up. We're now obviously today. Typically, in a normal year, October, November, December is quite a good period for equity markets, and they tend to rally. So this may be doing the same thing after the shakeout in October. So we were short. Went short, and now a big day today. So we're back over the 50-day moving average, and we're back over the 200-day moving average. So a significant turnaround today if you can hold it. So adding more buyers on the equity markets here on the daily time frame. Oh, there we go. So a huge day today again, taking out all the worry from last week, just being gobbled up. Moving forward. Subaru says text. I don't know what you mean, Subaru, my friend. What do you mean by text? Text. Don't know what you mean, my friend. Anyway, Nasdaq for Matolo. So again, we trended lower into the end of October, and it looks like it's turning around, and that's breaking high. That looks like we're already over R3 today because of the volatility of the election. Let's have a look at it. If we take it down to the 1 hour, see how, again, another big volatile day today, up to 11,750 over the R3. So we had some compression, and now it's got expanded. So it's trending higher on the, as you might expect, on the 1 hour, obviously on the 4 hour, based on that big turnaround this week. So 4 hour went long here, broke this crossing EMA strategy here. 3rd of November, and it's rallied high from this 11,195, and here we are, 11,700. So lots and lots of pips on offer there, and that's still trending and moving higher. The 4 hour time frame, daily time frame, only now really starting to move back up to 20-day moving average and the 50-day moving average. So that will probably be adding to some more buys if we hold up where we are today. So it needs to hold this sort of not necessarily as high as we are now, but to be positive over this 20-day moving average there, 11,600, and certainly 11,500. That would have added buyers today as we've broken through that psychological 11,500. It's also the 50-day moving average. Obviously, the daily candle isn't complete, so you can't really make any analysis on that, but it's certainly a very positive equities day. And this is all to do with the uncertainty with regard to the election. And just so people move into US assets when there's that sort of uncertainty around that, and the Japanese yen and Swiss franc and those sort of things, treasuries, US treasuries tend to get bought. There was a unwinding earlier in the week, last week, because started to unwind yesterday. The expectation of this big fiscal stimulus if Biden did get into the White House, but there's still be some sort of stimulus coming from the Republicans if Trump gets re-elected as well. So relatively positive day for equity markets as well. Nasdaq leading the others up as well. So that's the Nasdaq. You see the S&P 500 also today now back over its 50-day moving average. So now it didn't close above its 50-day and its 200-day. If we go to the Nasdaq, it's done the same sort of thing. So we're closed yesterday below these key two areas, and we've had very, very strong day today, and back over these key two daily areas. I wrote a little note about that yesterday. So off we go. Houston text. Zubra, I don't know if you're talking to me. Zubra, I'm assuming you're talking to somebody else, my friend. So I don't know. Good afternoon. How about it's my friend? I don't know what. You've lost me. You've lost me, my friend. Anyway, so markets open in about half an hour, and here the future is still another third day higher or fourth day higher after the big sell-off last week for equity markets. So back really where we were last week, back to this 3,425 as far as the S&P 500 is concerned. So I say traditionally November, December quite strong, typically good strong days for good strong months, I should say, for equity markets. Really, regardless of who gets into the White House, markets like consistency. So they would like, Trump to get re-elected. He's more business friendly, cutting taxes for businesses. Biden would have increased, or will, if he gets elected, increase corporation tax significantly. Tax the higher paid earners quite significantly as well, over $400,000 a year. Taxes are going up significantly. See how it all finds out. What would be the fate of the dollar if Trump? What's he saying? What would be the fate of the dollar if Trump gets re-elected and Biden, and vice versa? Well, both of them. To be honestly, both of them. The longer term trend by the market is the dollar. The dollar is likely to weaken over the next 3 to 6 months. That's been the outlook for most of the market analysts, most of the big banks, regardless of the outcome of the election. In a sense, there's obviously a caveat there. depending who gets in. But as I say, the main difference between the candidates, or it's quite stark the difference between the candidates, isn't it? As I've just said. So a Biden presidency would mean, if he delivers everything he's promised, would mean higher taxes on big corporations, higher taxes on people earning lots of income in the United States, let's say those earning over 400,000 particularly, and others as well. But then a more re-engaging political foreign policy potentially, and even nationally within the United States. How that affects markets, all to do with sentiment. Obviously, a reinvigorated President Trump into a second term. Remember, most US presidents do get re-elected. It's very unusual that they don't. There's only, I think, George W. Bush Sr., when he lost to Bill Clinton in 1992, was the last one to lose. And before that, we have to go all the way back to 1980, when Jimmy Carter lost to Ronald Reagan, when that ushered in 12 years of Reaganomics and cutting taxes and all the rest of it. There are a lot of things that Trump looks to for his policies as well. So coming back to Trump getting re-elected, he'll feel much more reinvigorated, looking to cut taxes again. He'll get much more, or even more aggressive, definitely with China. Might be reinvigorated to have another go with North Korea. He'll get much more bullshit, I would imagine, with the Europeans as well. He'll feel, especially, as the markets have been saying, he's been losing the pollsters where he's behind. It's playing very much to him, the man, the ego as well. But the policies are very business friendly. Equity markets again would start to move up. But, on the balance of that is that, equity markets are getting very, very frothy. There's some really, really mind spinning, earnings forecasts or predictions for growth on some of these companies, so it can't go on forever. But at the moment, just so that's a major caveat. But watch that, and then it's how the US comes out of this, through the winter with the pandemic. Will a vaccine be available in the first half of 2021, as everybody keeps saying? Will Pfizer is supposed to be the first company to deliver on asking for FDA approval for a vaccine as early as this month. There were stories in the UK press today about some parts of the UK being available, ready to approve a vaccine before Christmas as well, before the end of the year. So all of that is still the key thing that's playing out. But as far as the dollar's concerned, regardless who gets in, really, the market is expecting a weakening dollar, to answer that very simple question with a very, very long-winded answer. Okay, so I'm going to call it a day if there's no more questions. They seem to have dried up quite significantly. So, and obviously the audio is not great, as my friend Sean pointed out. I don't know if that's them all, or I've missed any from other sites or what. I don't think so. Yeah, I'm getting to Facebook. Okay. All right. So there we go. We're finished with the equity markets. I say 30 minutes to cash open, and here we are. USA 500 up, breaking its 20-day moving average, and the 100 USA 100, the Nasdaq doing a bit better, significantly better over R3, over the 20-day moving average here at 11,600, and tested 11,700 already. So, excuse me. And let's just finish with the dollar index itself, see if we're still holding 93, and indeed we don't. We didn't. We came down very aggressively, so dollar's weakened. That weakened dollar we've seen today continues, but dollar index supported by the 200-hour moving average today. From that consecutive rally, it moved down. There's the 200-hour there at 93.41, pivot point at 93.57, and then first resistance sits at 93.85. But it seems like we've already had that today for the dollar, so dollar's weakening going into the cash open. So take care, everyone. We'll see you all again on Friday when we'll be live for NFP. Remember, we've got oil inventories later on today. We got the Bank of England tomorrow. We got more PMIs still to come this week. Fed also later tomorrow as well. So loads and loads of data. Hopefully, we might see some sort of resolution in the presidential election tomorrow or Friday. Who knows? NFP on Friday afternoon, and then a well-deserved weekend rest for everyone. So take care, and we'll see you all again next time. All the best, everyone. Bye-bye.